Hello and happy Saturday, everyone. Let's cover some stock market news as far as what happened last week, and then I'm going to go over some interesting insights that I came across. Now, I'm testing out this as a stock market / investing only video. YouTube tends to not promote these videos quite as much, so if you enjoy this kind of content, let me know by hitting the like button, the subscribe button, and watching through to the end of the video, because all of those things massively help out the analytics on this kind of thing, and it'll just let me know that I need to put up more content like this. All right, let's get right into it. After getting some of the largest one-day drops since March, the S&P 500, the Dow, and the Nasdaq all had a small rally yesterday. The S&P 500 finished up 1.31%, the Dow Jones finished up 1.9%, and the Nasdaq finished up 1.01%. Now, we see this a lot of the time when there is a sharp drop-off. It isn't unusual to see a small correction rally. This is probably due to the fact that people are thinking, okay, there was this big drop yesterday, let me buy a little bit while it's low and I'll make an even better return. And I'm not gonna lie, that thought crossed my mind yesterday as well. But really, when you think about it, at the end of the day, or I guess I should say at the end of the decade, the most important thing is just simply how long you're invested in the market, not the specific day that you jumped in. It's not going to matter really whether you invested today or yesterday, 40 years from now, what your returns are at. In fact, there isn't a time in history where if you invested in the S&P 500 that 40 years later, your market amount didn't significantly increase. It's hard to lose money in the extremely long term, and that's the way to focus. And that's really how I focus my general investing strategy. Kind of how I look at investing. I personally reinvest nearly everything I make back into my own businesses, because that will get me my highest return where I'm at in my point in my career. But I still max out my Roth IRA, and I buy into index funds every single month as this ultimate backup plan, just in case, my entire life falls out from under me somehow later on, and I at least have this plan D just in case. And I recommend that everyone does the same. To max out your IRA is only $6,000 a year, so it's pretty reasonable for most people to use that as just an ultimate backup plan. If you don't have a brokerage already, check out my link in the description for Webull. If you sign up today and deposit $100, you'll receive 2 completely free stocks, and you'll help out this channel. You can even start an IRA on Webull if you want to set up some kind of safety net like I have set up for me. So moving on, I also read some interesting insights from Jim Cramer yesterday regarding a scheme that is being used to kind of trick more novice type investors. He calls them Robinhood investors because of the Robinhood app, and mostly young people use that app, I guess. How the scheme works is investors are bidding up currently poor performing companies in pre-market trading. The new investors are seeing these sharp increases in pre-markets and making purchases thinking that there's some kind of action or news or something happening in the company that deserves to shoot up. So they buy some stocks, and then the markets open up only to see the prices drop back down about a half hour after the trading day is actually open. And then these more novice investors are losing 10, 15% or whatever the dropped amount is. Cramer pointed out that, as an example, shares of American Airlines were up over 15% in the pre-markets, despite the company just announcing that second quarter revenue will likely be down 90% from last year. So despite the news couldn't be much worse, the price went up 15%. So this is a good example that something is going on here. He says that if you want shares of any of these companies, even poor performing companies like American Airlines or Hertz or something like that, that's fine. If you feel you want to make a purchase, if you feel it's a good investment, go for it. But wait until the markets are open half hour before you do it. That way you'll make a purchase after that pre-market hype goes away for the day. I think that what's going on here is pretty indicative of how the markets as a whole are working right now. People are just hyped up for this upswing in the markets and buying to buy, not because they feel like prices deserve to be that high. American Airlines is down 90% and people are investing it and hyping it up 15%. And really, we could look at the economy as a whole as being down 20 to 40%. And it's just simply not deserving to be at the same levels now as it was back in 2019 with much better levels of unemployment and a much more certain outlook on what might happen next. So this is all I have for today's quick stock market update. I'd like to thank you for watching, and I hope you have a profitable day.